Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the charts for Cardano, taking a look at what's been going on most recently and what we would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I really don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Okay guys, let's get started though. Let's jump on down and take a look at what's been going on with Cardano. Obviously with the recent kind of price volatility, it does kind of beg the question as to whether or not Cardano is getting ready for a big drop to the downside. If it can hold support, we might be able to see a little bit more of a push to the upside, but ultimately our main concern is whether or not we're going to be coming down to 28 to 34 cent or potentially even down to 22.23. So let's talk about what's going on with this upper end and all these kind of structures up here, okay? So basically we have fallen down here with a 5-wave structured move, okay? This is actually a reasonably large one. This is from when we were up here at 68.93. We had a 5-wave drop taking us down to 40.19, okay? From here we've seen nothing but a 3-wave structured move upwards. Now when it comes to Elliott wave theory, it's important that we understand that 5-wave structures, such as the one that we have over here, are a trend, and the 3-wave structures that we have going up at the moment are just corrective short-term moves and are not a trend. Okay, this basically could mean many different things, but I guess the easiest way to kind of articulate it is that this is a continuation pattern, which basically means once it's completed, you continue the trend that led into it, which in the case of Cardano is a 5-wave structure trend down, meaning that this is a short-term correction up before we continue with another 5-wave structure down, okay? And so ultimately, there's a couple of different patterns that we tend to watch out for. Let me just pull this over here and show you. Okay, so basically if we've got ourselves a 5-wave structure coming down like this, and we start to see ourselves with a 3-wave structured move upwards here, then we would expect ourselves to have another 5-wave structure move down. It is usually quite rare that you find a 5-wave structure that appears on its own. It can happen. I've seen a few of myself over the recent weeks. However, it's very unusual to be that way. You wouldn't really come across it very often. The kind of go-to, however, would be a 5-3-5, such as this one here, or a 5-3-5-3-5, which is actually a trend-based pattern. Think of it this way. If I grab my 5-wave structure, we have 1, 2, 3, 4, 5, with another 1, 2, 3, 4, 5, and then another 1, 2, 3, 4, 5. Okay, so you end up with a 5, 3 up, 5 down, 3 up, 5 down. Okay, this is another way of saying it's a 5-wave pattern just on a slightly bigger macro structure. So the minimum requirement really that I'm looking for here is a 5-wave move down, the 3-wave up that we're currently experiencing, and then another 5-wave drop, where of course I do estimate 28 to 34 cent, which is this yellow box area. This yellow box area is quite an important one. We'll probably talk about that in a moment as well. So essentially here we have this kind of move upwards. We can see that we've broken it down into many different areas. We've kind of got this big macro ABC structure. We then have inside our C wave WXY, and I've only used different letters here, not because they're technically the right ones to use, but just to differentiate between the waves. Okay, so we have a C wave which has a WXY, and then inside the Y wave we have another WXY. Okay, and you can see that we've pushed up a little bit here. Now, it could be that our Y wave or our C wave ends in 5-wave structure and all of that kind of stuff with 335 and all those things are possible. And we can see that we were pushing up towards this upper end. We actually got rejected from this 88.2% Fibonacci level. Now, we were expecting us to kind of push up towards 60.28, which obviously we haven't quite reached yet. If I pull that yellow box across there, you can kind of see that we fell short of that. Okay, and obviously the 61.5, the macro 1-to-1 ratio. Now, technically speaking, we don't have to push up any higher. We can, of course, articulate that these are done. There's no guarantee that we move up higher under these corrective structures. These are just common kind of retracement areas that we kind of would expect to unfold. So when we start reviewing Cardano here and we start saying, okay, well, at the top of maybe a Y wave, which is a top of a Y wave, which is a top of a C wave, there's a high chance that we're going to potentially be moving on down into this lower range some point soon, right? I don't know how to time the market. That's not something I'm going to get right, but we could argue that maybe by September we should be heavily moving down towards our lows. Now, of course, we can complicate things a little bit further here. Okay, we do have overlap. We know that this is not some kind of 5-wave structure going on within our Y wave at the moment, but we can, of course, acknowledge that our stochastic RSI, our momentum indicator, is giving us a bit of a mixed signal. Okay, so we can see here that we pushed up to the overbought area here, and this is actually a pretty reasonable one on the hourly chart. We were overbought at the top here. We moved down to oversold by this point, and then we're back up into overbought by this area. We are now oversold, but we are not back up in this overbought area just yet. So are we going to set another lower low, or are we going to kind of push up higher and harder than we were previously? Okay, now there's many different kind of ways of looking at it. I've spoken about these things in the past quite a bit. When we set lower lows and lower highs, generally speaking, for the most part, these tend to be more bullish than bearish, as we kind of think about these being the opposite way around. So normally when we start to see these things as continuation patterns like we have in our macro structure here, the move upwards continuation, they continue the move upwards after. Okay, this is something that we saw over this side, for example, right in here. I'm going to badly draw this up, but you kind of get the idea that we were setting these lower highs and lower lows, and then we broke to the upside. At some point, though, we will eventually have to break down, and we will be setting lower lows and lower highs, and that's kind of, under the right structure. But when we were this low, we're obviously kind of articulating that we are likely to push on up, and we can see that here. We obviously had a lot of resistance that we were working through, and that's really important to where we are right now as well. As you can see, this W wave high point came in just up here. Okay, this was basically 55.62, this old yellow line just here. And we can see that this is really an area that we're trying to battle our way through right now. If we can turn this into a level of support, we might be able to battle our way up and grab another little bit of area here just to move up towards maybe our targets of 60.28 and 61.55, right? Those are the areas that we kind of want to be really focusing in on for really reaching those macro levels. But, for the most part, there's no guarantee of it, and we have already created overlap and some of those other concerns. Now, as we come up into the higher time frame with the 4-hourly, we end up with a very similar idea. We are in this oversold area, meaning that we are likely to see some kind of push upwards, even if it is just short term. The same can be said for the 8-hour. The daily, not so much, though. The daily and the weekly stochastic RSIs are telling us that our macro direction is down, and ultimately we should be thinking about where we are heading. This is something that I think a lot of people probably need to listen to and start to understand that essentially you're going to have a lot of bullish kind of signals on the lower time frames, but ultimately the macro direction of the market is the one that's going to outwin the others. Okay, macro is always better than micro in certain circumstances, and this is one of those. Basically, our momentum on these larger time frames are telling us that we do have to see a nice healthy drop in the market. Okay, so when we start reviewing Cardano here on the smaller time frames, we're thinking, okay, we might be able to push a little bit higher. That could also be perceived as a bit of a trap, where we want to be very, very cautious at this point. When the macro is already so heavily overbought, we need to see some corrections in the space, specifically on this weekly chart, which of course we can look back at the history of every time that we've been up in this overbought area. What has happened afterwards? We've seen very significant pullbacks on this one. Okay, and that's actually just the daily. If we come up into the weekly here, you get a much bigger picture as to the scale of what this might look like. Okay, and I did this for Bitcoin, so I'm going to do it for Cardano here. Last time we were up in the overbought area, we were on this particular candle just here, and we fell down into the oversold area, actually all the way down into this kind of low range here. We actually bottomed out with a 67% drop. Now, of course, we can go back a little bit further. We can take a look at this one. We went from overbought to oversold with a 61% drop. And of course, we should also look at the bull run side of things as well. It's also important to understand that, we're going to go from an overbought area over here to an oversold area on this side during a bullish momentum. We're 51% retracement. Now, up here, we actually hovered above this high area for quite some time, and then we pulled back down. This is actually probably the least amount of retracement in this kind of last moment of about 38% just in here. But other than that, really, every time we're in its overbought area on our weekly time frame here, overbought to oversold has equaled very, very deep corrections for Cardano. And I don't believe that we should be expecting anything different at this time for Cardano. So when we're up in this overbought area on the stochastic RSI, knowing that we're going to shift momentum to the downside, probably in September, maybe a little bit earlier, depending on how people want to perceive the market, and we should be looking at a pretty decent level of a correction. Whether we go for something as small as a 38% retracement, if I do take that from where we are, then we'll be talking about still dropping down into new lower lows at that point. Okay, talking about 36 cents. If we were to go after something like a 50% pullback, then we're talking about something around the kind of 29 cent, which is kind of where I think things are likely to go. And if we go any deeper, such as 60%, then we're talking about that 22.23 level right down here, which is the 1-to-1 ratio on the macro scale. Okay, and that is kind of completing the entire correction at that point. Of course, depending on what Bitcoin and the rest of the market does, there could be some bounces and some further downside afterwards. But in terms of taking our stochastic RSI from an overbought to an oversold area, I would be expecting a minimum of around 40% retracement, if I'm being brutally honest with you, which would mean new lower lows in the case of Cardano. So we would be really cautious about that. But maybe, we should also reflect on the fact that these are, of course, just short-term movements on a much bigger scale. So if we want to hold Cardano for a long period of time, then of course we can articulate what might be going on over a much longer period, which of course is this big swing all the way to the upside here. Now, this is based on a 5-wave structure up here, this being our trend, this being our 3-wave structure, okay? And as I said before, right, when we start to see these things setting lower lows and lower highs, okay, I did that the wrong way around, and then we obviously know that this is a continuation pattern of something bigger. Now, obviously, as I also spoke about earlier, I was talking about this kind of smaller time frame, but a 535 is also something that we would see. So we wouldn't expect to see 5 waves on their own, even on a scale like this weekly chart. So a 3-wave down, say 5 up, 3 down, 5 up would be my expectations. Now, of course, $38 is absolutely insane. I don't think we're going to be pushing that high, but it's there as an indication as what the technicals are indicating to us from the fib levels. For example, if I run a fib from the high to the low over here, I move this over to our 22.23 area. You can see here it comes out at $39, but that's not exactly bang on perfect, but you kind of get the idea. Now, I personally think that we're going to find resistance probably around the 618, the 702, the 786. Either way, these are still very, very good returns on investment. If we do, however, have some kind of really insane kind of run, then 17,000 kind of matches up with our A wave. However, I think it's probably more realistic to be aiming somewhere between our 702 and but more specifically the 618 and the 786, which would put us about 2,300% in gains to about 5,700% in gains. And those are one of the areas I think is the most probable. But again, this is crypto. We could see a $38 Cardano. But I know that seems bonkers. The market cap would be insane. And I think it's important that we understand what market cap is, right? Because market cap simply is not a barrier to price discovery. Market cap does not represent the amount of liquidity in a protocol either. It doesn't show you anything to do with the money aspect of it. It just shows you the macro price level of a coin. Now, I know that might sound really bonkers because surely price is value. And I think some people might understand that as an intrinsic kind of thing. However, that's not technically true. Basically, all you have here in terms of market cap is going to be price multiplied by the circulating supply. Remove some of the supply, the price just automatically shoots up there, right? At least until some new supply is entered into the ecosystem. And it's all about supply and demand. This is something that we all know. We can see the prices of gas and fuel around the world, and we can see the prices that for things going up in shops, and we're going to see a whole host of different kind of things that occur as supply potentially gets squeezed down. Now, in the case of Cardano, there is a pretty big squeeze on the supply, but again, it doesn't really mean terribly too much in terms of staking and things like that, because that ADA can move more freely than maybe something getting locked up on an exchange for 30 days. That being said, though, I do think there is a bit of a squeeze on the supply from the exchange point of view. So Binance has been offering some pretty good lucrative deals to kind of get people to lock up their ADA. And, I think on the back of that, we're going to see, reasonable amounts of demand coming in once the ecosystem goes live. And of course, we're going to see that squeeze really take effect, making that price move up higher. But again, I think $38 is a bit on the extreme side. So anywhere really between 5 and 10 seems to be the most logical under this kind of structure. But guys, those are kind of my thoughts at the moment. I do think there is a very strong chance in the coming days, weeks, that Cardano does have a pretty significant drop to the downside. But do not worry, because long term, I do think this is a fantastic opportunity for accumulation before we actually get going into the next bullish cycle, which of course has some pretty good lucrative targets associated with it. Guys, I'm going to leave this video there. If you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.